Hello and welcome to Finance Talk with myself, Sapphire. This week is a guide to finding the right investment property. Now, if you're new to investing in property, this week's talk is really for you. And if you're a seasoned investor, it's also about getting a better or more understanding of where to find the right properties to invest in and finding that lucrative or that little gold mine, as people say, when it comes to investing in property. Each week, we bring you different topics based on our blogs that we share every Monday with you. And on a Saturday, I do a review of that blog. So if you want to see our blogs in its entirety, please visit our website, www.savvywomen.co.uk, where you can find all previous blogs and this week's blog that we're talking about right here, right now. So the guide to finding the right property is quite simple so long as you follow the steps. So let's get started. So finding the right investment property is certainly one of the keys to succeeding in investing in property, no matter the strategy that you're going through. This could be a residential buy-to-let, it could be commercial, but understanding where to find that right property is key. There's many areas that are up and coming for the rental space. And as you heard me probably in the news this week, I shared with you that the rental shortage out there is really ripe for any investor wanting to get into this space right now. It's going to be very lucrative for you as well, because there is a shortage of housing out there. So getting into investing now is key. So where would you find properties and where is the right location, but how do you follow this process? And what does it take to follow this process? So first, consider whether you want to look for an investment property on your own or whether you wish to use a broker to assist you with this process. Now, why have a broker assist you with this process? There's many reasons why I use a broker to find my mortgages, the best mortgages for the property in the area in which I'm investing. But also, brokers can really help you to actually decide what area is best to invest in. In many cases, many brokers are known for properties which are on the market as well. There's brokers that know where the properties are, estate agents, letting agents, even property portholes. These are key to building out your investments and finding that right property. A broker is also usually very versed on local neighborhoods, which definitely can be important if you're buying in that area. There's different ways that you can look at a mortgage broker. Are they there to facilitate funding your property investment, and are they there to help you also decide if it's a lucrative investment? They can run the numbers and see whether it does stack up and whether it is a good investment to get into. So finding a finance broker just to have a conversation is key. Finance checks. Before you actually begin looking at prospective properties, make sure that you have gone through your finances and have them in order. Ideally, you should check your credit file and several months before you plan to purchase any investment properties. You can certainly do this by going on any Experian, Equifax, or a platform where it allows you to search multiple credit reference agencies. This will put you in good stead because it allows you to see if you've got any adverse credit, if your credit score, where is your credit score lying, and what you need to do to pull that up. And if you're doing it a few months ahead of time, it allows you to build up your credit as well. And if there's any inaccuracies on your credit report, at least you have the time and the window to do this as well. There's many ways of you looking at your credit report to see what you can borrow. Most credit referencing agency now actually has where it doesn't leave a footprint, where you can actually see how much credit you will be able to get based on your current situations and circumstances. And then it will prevent you from, when you're applying for a mortgage, you know exactly that if you're a good credit, what type of mortgage you will get. And if your credit isn't so good, you still can get a mortgage, but then you know that your mortgage interest rate is going to be slightly higher, and you might have to pay more on your deposit because of it. So research what to look for, understanding the market value. It is important to research about the local market so that you do not overpay for a property you ultimately purchase. When you do purchase a piece of investment, a property, you need to make sure that the deal you strike allows you sufficient room for a profit. Always go into a deal where it gives you instant profit, and that's buying below market value. So when you're looking at a property, is it giving you below market value before you actually purchase it? Is it got built-in equity into the property so that you've got a nice buffer, you've got a profit margin? On August the 9th, 2021 in Edinburgh, Live said properties have risen by more than 63% throughout one in-demand Edinburgh neighbourhood. According to reports commissioned by the ESPC, 2 to 3 bedroom homes are being snapped up, whilst in some areas in Abbey Hill, the cost of a 1-bedroom flat has fallen 1.8%. You can read more about that in Edinburgh Live. Another expense that you might have to consider is renovation costs. If you're looking for an investment and buying below market value, is it because that you need to renovate the property? Carefully consider the advantages and disadvantages of purchasing a property that could be labelled as a fixer-upper. While you are very well may be able to purchase the property for less money than other properties, you may well find that the purchase is a money pit. So don't get caught out by looking at a property, falling in love and thinking, yep, it's a really good deal. Make sure you do all your due diligence. If a lot of the majority of repairs and renovations are required, this can equate to a large investment of both time and money. In this case, it would be better to pay more for a property that requires less attention. So troubleshooting, before you purchase any property, take time to have it inspected. You can get valuers to do that, or you can get a builder as well as a valuer, because if you're borrowing money, lenders will ultimately send a valuer out to value that property to make sure that when they're lending you the money, they're not lending it as a dud property. So it's going to fall apart at its seams once you've purchased it. Even if you have it inspected, the property on your own, you should still have a professional to go over it. The property should contain the electrical wiring meets code. There is no lead lead in the paint. Overall, the property is safe. You should also check, an inspector can also sometimes turn up problems which you might not notice and ultimately cost you in the long run. Have you checked the roof? Is there any damp in the property? Is there any subsidence? Is there any Japanese knotweed in the garden? These are the things that someone with a trained eye and someone that understands how to value properties will be able to look out for you. There's so many times that people have been caught out because the inspections was not done. They've gone into the property and they've seen black on the wall and they just thought that was dirt, and that ended out to being damp. And if you've got a damp issue, where is it coming from? Is the brickwork all right? So these are the things that you need to look out for while you're troubleshooting on a property. Always make sure you have someone with more experience if you're a newbie. And even if you're a seasoned vet, I always have my properties appraised and valued by an independent, as well as the mortgage companies as well, just so I have an idea. And I'm a seasoned investor and I understand what to look out for. But still, I would like to check, because you could have some instances. I've bought a property where there was nice flooring, property didn't really need much work on it, but I always like to go in and remodernize my properties. However, on this occasion, the floor underneath, once we took up the laminate flooring, was sloped. So we had to raise from the basement, which was costly as well. So there's different things that you won't see to the trained eye, only when you've purchased it that you will see it. So another way of looking at this is making sure that you have a contingency plan and a contingency fund. So you can support, if you do buy a purchase property, values have stacked up, your mortgage lenders lent you the money, however, unforeseen problems that you didn't see. So make sure you make a list of all the problems that you can see, because this also can help you to reduce the price as well. If you go back with a list of things that is wrong with the property and go back to the person that is selling it, you are informed of what the information you have, what the cost is going to be, then you can negotiate the price down. Location. Take the time as well to research the local market of the neighborhood. Check that the local police department to find out whether the area is safe and if you need to provide any additional security to your properties. Drop by the local town hall to determine whether there are any plans of the local area that could be potentially lower the value of your property as well. Research the property market in your area to find out the conditions of the prices. If the price has gone down recently, this could be an indication that rents will also be low. On the other hand, if a home prices in the area are high, this could be an indication that there is demand in that area and may be able to charge higher rents. But the key thing here is don't rush, take your time. Don't make mistakes by settling for a property simply because you're in a rush to invest in a property for your business. This could result in an investment that will require you to spend more time or money than you originally planned for and distract you from your profit margins. There are a lot of avenues to get in on an investment property ladder, but making irrational decisions can evidently become a burden, losing you money in the long run, and instead of increasing your profits. But with these tips, you have a few steps closer to your goal. The Savvy Women Group wants to continue to help you on your path of securing your finances and building out your property portfolio into a lucrative business. We offer a range of property courses focusing on preparing you for your success in your ventures. Our free lifetime access to our resources as well is on our website with helpful downloads. And for our weekly blogs that we post every Monday, please visit our website. I hope you enjoyed this week's finance talk, and we bring this to you every week on Saturday, and there's different topics based on our blogs. If you'd like to visit our website, you can go over to www.savvywomen.co.uk, and you also can share your comments in our social media handles, 50 Savvy Women on Twitter, Facebook, Instagram, and YouTube. Remember, you can also reach out for a free discovery call where I can help you decide what is the best avenue to go in for your property investment. Remember, one strategy at a time, one property at a time will make you lots of profit. Thank you for listening, and I hope to see you next week.